Getting back to work. Traders take a cue from optimism in the latest jobs report. In today's cover story, could Dodd-Frank be finished as Republicans take control of Congress? Why Sears could soon become more valuable, and it's not because of the clothes. Plus, move over Cyber Monday. There's a new shopping holiday for bargain hunters. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Monday, November 10th. In our first look, stocks jump on jobs. For the 56th straight month, more than 200,000 jobs were added to payrolls. The unemployment rate dipped to a 6-year low of 5.8%. Stocks moved into record territory Friday on that report. The Dow and S&P both closed at all-time highs. The Nasdaq lost 5 points. Gold rallied $37, the biggest up move in 5 months, and oil added on 52 cents. AT&T is agreeing to pay $1.7 billion to acquire the third largest wireless operator in Mexico. And fast-growing car service Uber reportedly is attempting to raise $1 billion in new capital. Trader Bob Iacchino at Tethys Partners joins us on this Monday morning. Hello, Bob.
Good morning.
Well, stocks hit new highs on Friday. Can investors count on the market to still keep going higher?
I think they can, save for any weird information, geopolitical situation this week. I think they really can. We're looking at probably another percent and a half to the upside in the S&P. That jobs number we saw on Friday was sort of a Goldilocks just right kind of number because it pushed the Fed back in terms of the timeline of raising rates. So anyone who thought it was going to come maybe in March, April, it's back out to May, June. We had a little bit of a miss on the headline number, not too bad on the unemployment rate. So everything looks good for more upside.
What are you watching for in oil? We hear reports that President Obama is calling for 1,500 more troops to go to Iraq. There's a report that Russia is moving into Ukraine with more tanks. And as you mentioned, the U.S. economy is getting stronger.
It's interesting for conspiracy theorists because if you look at what Saudi Arabia is doing with crude, they're clearly targeting Russia in terms of taking market share. They're not targeting U.S. shale. So military actions by Russia don't surprise me. Obviously, the Iraq situation is what it is. So watch Brent crude oil to see if it's geopolitical, WTI to see if it's demand.
Thank you, Bob.
Thank you.
Time to say good morning to Chuck Coppola, who has an update on the Takata airbag scandal.
Good morning, Angie. Lawmakers are calling for a criminal investigation into Takata's defective airbag recall. It follows a scathing New York Times investigation, which claims Takata executives knew about the potential safety defect a decade ago and asked employees to hide the evidence. Takata says it will continue to fully cooperate with the government investigation. Globally, 14 million cars are being recalled due to airbags that have the potential to explode with too much force. Bill Visnick, senior editor of Edmunds.com, says the situation is a violation of quality standards in the auto industry.
They all have quality metrics that are well understood, frankly, and well known. So ultimately, you have to place the responsibility on the manufacturer, on the developer of the component.
Friday, Honda expanded its recall to include various models in 13 states with high humidity. Regulators say humid conditions can increase the risk of airbag explosion.
Hundreds of GM car owners are going to court over defective ignition switches. A judge has set the court date of January 11th, 2016. Owners are claiming economic loss and personal injury due to the faulty switches. 2.6 million older model Chevy Cobalt, Saturn Ions, and other small cars have been recalled by GM. 30 deaths are linked to the defective part.
Issues at West Coast shipping ports are creating challenges for retailers ahead of the holidays. Members of organized labor who've been without a contract since July and equipment problems are creating delays of shipments. And Taylor says its sales last quarter fell more than expected due to merchandise delays. A Walmart executive confirms that the retailer is experiencing only minimal delays. And Kohl's says it's using ports on the East Coast to avoid problems at the ports of Los Angeles and Long Beach. However, analysts say air freight companies could benefit from the slowdown as the goods pile up.
Billionaire investor Eddie Lampert is making the bold move many in the financial world suspected he would once he took over Sears. On Friday, Sears divulged plans are in consideration to sell up to 300 stores. It's not the stores that have the value, but the property. Those 300 prize locations would be sold to a real estate investment trust. It's the first sign that Lampert is accelerating the breakup of the retailer. Sears loses $7 million per day. The company is scrambling to raise cash. Shareholders applaud the REIT plan. The stock spiked 31% on Friday.
Abercrombie & Fitch is in a sales slump. Sales were down 12% in the third quarter, hurt by weak store traffic and low sales in Europe. Rivals Forever 21 and H&M are taking the lead in sales. Abercrombie & Fitch says it plans to transform its image with less trendy clothing to attract older consumers. Abercrombie shares slid 16%, to close at $29.50 on Friday.
Home Depot is warning customers to be on the lookout for phishing scams. The home improvement retailer says 53 million emails were stolen in a massive hack attack earlier this year. Home Depot discloses now that hackers have email addresses, their next trick is to fish for more personal information by sending out phony emails.
In our cover story, will Dodd-Frank banking reforms be undone now that Republicans will control both houses of Congress? Former Vice Chair of the Federal Reserve, Alan Blinder, doesn't think so, but he did concede that there may be some tweaking. Relief for community banks, for example, which claim that they've been lumped together under tighter regulations as with those considered too big to fail. There's little doubt the Republican agenda will take on some aspects of Dodd-Frank, the Wall Street Reform and Consumer Protection Act prompted by the financial meltdown. Senator Mitch McConnell of Kentucky said the Banking Committee is certainly going to look at Dodd-Frank. The Banking Committee will want to take a look at how much damage it's done to the little guys who had nothing whatsoever to do with the meltdown in 2008. Alan Blinder, former Federal Reserve Vice Chairman under President Clinton, thinks that may ease restrictions on community banks, not Wall Street, that were going to come anyway.
The timing might be right, and I think that might have happened if the Democrats kept control of the Senate. I think there's a pretty widespread view in general that community banks should have a lower regulatory burden than giant banks.
But Blinder thinks other aspects of Dodd-Frank may stand. The Consumer Finance Protection Bureau, for example, may not fall victim to budget cuts as a way to prevent it from doing its regulatory job, he says.
The CFPB draws its funding independently out of the Federal Reserve. So it doesn't have to go to Congress for an annual appropriation.
At a banking conference held at Chicago's Federal Reserve Bank, Blinder faced questions about whether Dodd-Frank's higher capital requirements for insurance companies might be eased.
The country is still pretty mad about what the bankers got away with and the problems that it left. So I think it's a tough political road to hoe to say.
Dodd-Frank also subjects banks with $50 billion or more in assets to greater scrutiny. Some believe this is too low and should be raised to $100 billion. It's estimated that about 24 lenders would benefit from this.
President Obama is seeking common ground with Republicans as they prepare to take control of Congress. The president invited congressional leaders to a power lunch at the White House Friday.
The American people just want to see work done here in Washington. I think they're frustrated by the gridlock. They'd like to see more cooperation. And I think all of us have the responsibility, me in particular, to try to make that happen.
Immigration is one of the areas where the two sides clash. Also, House Speaker John Boehner last Thursday threatened to dismantle health care reform. On Friday, the Supreme Court agreed to hear a key part of Obamacare that could limit federal health insurance subsidies for millions of Americans. It shook up shares of several health insurance companies, including United Healthcare, which fell 2.6%, and Tenet Healthcare. That stock declined 6.5%.
Humana Health earnings failed to hit the mark in the third quarter. Earnings fell 21% to $290 million, compared to $368 million in the same period last year. The health insurer blamed the drop on Obamacare spending and expenses related to research of its hepatitis C drug. The company says it hopes for a boost from Medicare spending next year. Shares fell 6.5% to $130.58 on Friday.
Changes in the oil industry are hurting the world's largest offshore drilling contractor. Transocean is taking a close to $2 billion write-down for the latest quarter and is also delaying its earnings report. It's happening as drilling business declines and oil prices fall to a 4-year low on a surging supply. Transocean, which trades under the ticker symbol RIG, is down roughly 40% for the year.
Picky eaters could be behind a drop in sales at General Mills. The maker of Cheerios and Yoplait is cutting its sales and earnings forecast for the year. It says consumers shift away from cereal and frozen veggies and look for fresh options with more value. Aaron Lash of Morningstar adds that there's also mounting competition in the grocery store.
I would say that the categories have been competitive, especially in the center of the store where General Mills tends to compete.
Lash says the produce departments at grocery stores are getting more foot traffic. This is steering consumers away from the processed food typically located at the center of the store. Morningstar predicts General Mills' acquisition of natural foods label Annie's may benefit the company. General Mills shares fell 3.5% on Friday.
At Dunkin' Donuts and Starbucks, breakfast has leaked into lunch, and now dinner could be next on the menu. TheStreet.com reports the two coffee chains plan to beef up dinner-friendly foods next year. The hope is to keep customer cash coming in around the clock. At Dunkin' Donuts, sales dropped to 40% by lunchtime. Starbucks is expected to share more dinner details at its investor conference coming up December 4th. Checking the earnings calendar for today at Caesars Entertainment, Dean Foods, GoGo, Sotheby's, and 3D Systems. Still to come, how manufacturers are helping our nation's veterans build a future, and find out which sectors of the economy are highly focused on hiring, plus why the latest jobs report bodes well for the American paycheck.
The city of Detroit is rising from the financial ashes. After 16 months, a judge confirmed the city's plan to emerge from Chapter 9 status. It erases $7 billion in debt. The plan includes a 4.5% cut in pensions for retirees and no cost of living increases. Detroit will use $1.4 billion over 10 years to improve the city. The deal also saved the Detroit Institute of Arts from having to sell off its collection valued at $876 million at Christie's auction house.
The October jobs report reveals strength in hiring. A breakdown by sector shows job growth was robust in leisure and hospitality, followed by education and health services and professional and business services. Transportation, warehousing, and manufacturing also made it into the top 5. Bill Mueller picks it up now with what the labor report will mean for wage growth.
Okay, Angie, thanks. Well, here again is the headline for the October employment picture. 214,000 jobs created in this country. Unemployment rate falls to 5.8%. Well, you know, it's important to talk about some of the important trends behind those numbers. Let's do that now with Brent Schutte. He's the Senior Investment Strategist for BMO Asset Management. All right, Brent, let me ask you, the one thing that's missing here, and it's basically the thing that contributed to the loss for the Democrats in the election last week, even though the economy has been improving on their watch, and that is wage growth.
Absolutely. It's kind of interesting. You heard a lot about big government contributing to their defeat, and actually this report shows that the federal government is as low as it's been since 1966, and it actually drew down to a post-cycle low. Going back to your wage growth comment, this is a disappointment in this report. People are looking for an increase in wages. You've had some surveys point to that. You've had different anecdotes of wages rising, and in this survey that didn't happen. I think the important thing is that you are at a point where wages should begin to rise. If you look right now, there are 1.8 job openings per job seeker, which is not too far from the 1.4 that we hit in 2006, and certainly way down from the 6 in 2007, 2008, 2009. And so with less competition for jobs and the unemployment rate falling to 5.8%, you as an employee can extract some wage gains, hopefully.
Well, Brent, let me ask you about revisions. It seems to happen every month, most months this year. In fact, is that likely to happen here?
My favorite topic. This is the 9th consecutive month of job gains above 200,000. Last month I couldn't have said that because the August number was disappointing at 142, if you recall when we came in. And I noted during that time period that the revisions on average have been 30 to 60,000. Well, as of now, the August number has been revised up to 203,000. And so you have 9 months of job growth above 200,000, which is the first time we've had that since 1995. This job recovery has been steady, remarkably steady.
Well, we know the economy has been improving on most fronts. Is this part of an upward moving trend?
Right. I mean, things have proceeded slower than I think most people would like. And I say consistent, and prior recoveries and jobs have been sharper, possibly, besides the last one that we had. And so I think you've just seen some slow gain of confidence back.
All right, Brent, thanks so much.
Thank you.
Well, JP Morgan is doing more firing than hiring. The bank plans to cut 3,000 more jobs than previously expected. The positions will come from the retail banking side. The layoffs were laid out at an investor conference Friday. JP Morgan shares barely budged on the news. Coming up, how the manufacturing industry is gearing up to hire our heroes. Plus, find out the best day to shop online this holiday season, and it is not Cyber Monday.
Forget Cyber Monday. Thanksgiving is the best day to shop online. Retail prices online will be discounted an average of 24% that day, better than 20% on Cyber Monday or 23% on Black Friday, according to a forecast from Adobe Systems. But for those who like to fight the crowds, the study adds that online and in-store prices usually match.
Tomorrow, the nation honors veterans of war along with servicemen and women protecting our country now. Maribot Knight of Crain's Chicago Business reports on how one Marine is standing up to the challenge of finding a place to serve back at home.
In Afghanistan, Sergeant Paul Loby was in charge of more than a dozen Marines and thousands of pounds of heavy artillery. After 4 tours of duty in Iraq, Afghanistan, and the Middle East, he was discharged from the U.S. Marine Corps and joined the ranks of thousands of other returning veterans. He was unemployed.
I would send out an email, hey, I'm a veteran, I just got out, I'm unemployed, I'm looking for work, and I just sent out dozens and dozens of emails.
He got an email back from the Illinois Department of Employment Security, offering him a spot in a first-of-its-kind program called the Veterans Rapid Employment Initiative, aimed at putting veterans back to work in manufacturing.
The program's short and intense. It's really an introduction to manufacturing. What are the, showing them what are the opportunities, but also helping the veterans identify the skills they already possess, how those translate into on-the-job skills they could bring to employers.
We all talk about how we're going to get out and go be a janitor because we have no idea how these skills translate, and no one knows about manufacturing.
Rand Haas is an outside consultant responsible for coordinating the initiative.
The veterans come in and they don't realize that they already have many of the skills that employers want. And that's what the Veterans Rapid Employment Initiative does. It helps them understand the career opportunities in manufacturing and then also how to build a resume and how to build a presentation to get that job.
The veterans bring a wide variety of skill sets. I'll call it the intangibles you don't always think about, besides the trade skills, is the attitude, the leadership, the work ethic. They're mechanically inclined because they've been working on, tanks and guns and all that stuff.
4 weeks into his new job, Mr. Loby says being employed is great, but it's definitely a change from what he's grown to know over the past 8 years in the Marine Corps.
It's a family company, it's small, and I really like that, but there's not as much of a brotherhood or a camaraderie. We're not the same as the Marine Corps.
Our thanks to Maribel Knight of Crain's Chicago Business for that report. Still ahead, the retailer one trader wants to bag ahead of earnings. Chart Talk is next. It's a big week for retail earnings. Joining me now is Matt Kavanaugh, CMZ Trading. Matt, let's talk about Macy's. What is the motivation to buy this stock?
Well, I think one of the key motivations is that if you want to be long a retailer, they're probably one of the best to be long. And, that and the fact that I think they're pretty attractively priced as well. What's the bigger catalyst then? Will it be earnings or the holiday shopping season? Well, all eyes are going to be on earnings, first of all, because it's been such a mixed bag for retailers, number one. But also, number two, people want to say, hey, are these lower unemployment levels, the lower gas prices, this economy coming back, is all that going to help them, or is it kind of going to keep dragging on the retail side a little bit? Macy's is up about 10% for the year, so it's really almost outpacing the S&P 500 year. It's doing a great job. Is this level too high, though, to get into for the average investor? Well, not often am I going to say, I think that it's okay to buy a stock when it's close to its all-time high and the sector's not that great. But I think for this one, if you want to be in retail, this is a stock you probably want to be in. It's not that expensively priced. I think we're close to support. And also, I don't think people are really expecting that much out of them for earnings. So I think to the downside, you got a little bit of support right here that should help, and maybe they say something great that makes this stock pop back up towards a $62 range.
Well, it's impressive. Either way, the S&P 500 is up, 5% plus. So there you go on Macy's. Good to have you here. Thank you, Matt.
Thank you.
It's time for us to say so long for today. Coming up on Veterans Day, an American hero rolling his way to success off the battlefield. From all of us at First Business, have a great start to your week.